So you've clicked on this video because you're looking to take the switch from Forex to futures. In today's video, we're going to be covering these main topics on the differences between Forex and futures. And at the end of this video, I'm going to give you a bonus, which is my Asia sweep model that has over a 70% win rate trading futures. But before I move into this, I want to see if this is you. I want to trade futures, but I'm scared to take the switch. Most likely why you pressed on this video. I've been trading Forex, but I'm worried I'm going to delay my progress switching to futures. Completely understandable. It's something new, but you'll pick this up quick, especially if you have trading experience. Futures contracts confuse me. I prefer lot sizes. I'm telling you now, if this is you, this sentence is going to switch around because when you start using contracts, you realize how easy it is to calculate risk. It's actually a lot easier than lot sizes. So on the right here, I have the two most traded futures pairs in the world, which is the NASDAQ and the S&P 500. And underneath, I have two of the most popular Forex pairs, Euro USD and GBP USD. And we're going to be comparing the differences. So you can see here currently I'm on a daily time frame. And if we just zoom out on the NASDAQ that we're currently on, you'll see the overall movement of this asset. So if we zoom right out, you can kind of see here pretty much, since 2020, this asset has been on a consistent uprise. And if we go back, you can see over time, this asset just consistently goes up. Now, if we go from the same point, which is February 2020 on futures, and we jump over to Forex on Euro USD, and we mark out the same point, let's take a little look at the differences. So if we go to 2020 and we go to February, can you notice the difference already? Notice how Forex tends to go sideways, but on the NASDAQ, it's the complete opposite. It just goes up. Now, the long-term behavior of these assets are relatively simple. Now, let's go into it why. So, Forex is designed to hold a stable value. And a lot of the time, you will get very manipulated moves. But overall, this asset is designed to hold a consistent value, such as this. However, with futures, it's slightly different. It's actually designed to go up in the long run. Now, this difference alone should already be a bit of a wake-up call to you. If we take a little look at this example, currently, you're trading Forex, which is designed to go sideways. It's designed to hold a stable value, and you're missing out on an asset that is designed to go up in the long run. Now, you have to ask yourself the question, which asset is going to be easier to get involved with on a consistent basis? Is it going to be the asset that's designed to go sideways, consolidate, and manipulate at times? Or is it going to be the asset that's designed to go up in the long run and has very clear structure? Now, if we come to Euro USD and we actually draw out the overall price behavior at from the start of this year, you can see here, 2nd of January, this is the movement. As you can see, we pushed up, we pushed down, we push up, and we're back pretty much slap bang where we opened at the start of the year. If we go to futures and we do the exact same thing from the exact same point, from January 2nd, you can see there's a massive difference. Like, look at the difference. Can you see which one's a little bit cleaner? Like, you could have bought anywhere in this price action and you'd have made money. So from just this representation alone, can you see the difference in behavior of these assets? One of them is designed to go up in the long run and the other one is designed to hold a stable value. Now, there's a key difference between futures and Forex, and it's actually called spreads. So if we just jump into a 2-minute time frame on Forex and we wanted to get in line for a long position, you enter long here, but in actual fact, you get filled here. And every time you enter a trade, you're always starting in drawdown. In futures, this doesn't happen. So this is a 100K evaluation account, and I'm just going to show you the exact reasons. So you can see here, this orange line. This is where price currently is. If I was to enter short here, you will see I get filled at that exact level. It's perfect, right? There's no spreads. I'm not starting in drawdown. I'm always going to get filled exactly where I decide to enter. I used a contract here, and you can see that I'm currently in $1 drawdown, $1.50, $2, etc. And if I wanted to scale into the position, I can just add another contract. And this is the beauty of futures markets. There's no spreads. I don't have to worry about getting a really bad fill. When I enter, I will get filled at that exact price. Futures platforms are actually so easy to use as well, like super simple. As you can see here, I can just move my line to set my break even, etc. And to get out of the position, I can just push this button here and I'm out the trade. And the futures platforms are super smooth as well. You don't have to worry about MetaTrader. You don't have to worry about scrambling around on your phone. You've got a super clean execution platform where you can take trades and it's super simple to use. And that's what I love about futures is I don't have to worry about getting a really bad fill on my trades. Now, on the topic of prop firms, let's move into prop firm pricing. So this is one of the most popular CFD firms in the trading space, which is FTMO. And let's take a little look at their pricing. So you can see here for an 100K account, you're looking at about $521 for a two-step evaluation, meaning you have to make 10%, then you have to make 5%, and then you are funded. If we take a look at one of the most popular futures firms, which is Alpha Futures, the pricing is slightly different. For an 150K account, we can get it for half the price. And once we pass the account, we no longer pay for it. That's it, it's done. Oh, but your payout rules are rubbish. Well, they're not, because you can get them every single week. And you only have to trade a minimum of 2 days to get a payout. So you can already see there's benefits to being a futures trader. You're gonna get much cheaper accounts, meaning it's cheaper to scale funding. You only have to make 6%, and that's it. You make 6%, you are then funded. Compared to CFD firms that require you to make 10% and then another 5% on top of that. So futures are cheaper, easier to scale with, and easier to get funded. CFDs, more expensive, reliable, but much harder to get funded. And there's loads of different plans as well. You can get advanced plans, you can get zero plans. There's so many different plans out there. So do your research and find out which one is going to be best for yourself. Thank you for today's sponsor, Alpha Futures, who are really setting the standard in the futures trading space. And if you weren't already aware, they're actually the partner company of Alpha Capital Group. With over $50 million in payouts and used by over 1 million traders. And if you're a futures trader and you're not using Alpha Futures, you're missing out on some seriously good accounts. You can come on their website and you can check out all the reviews they have, and they're so transparent about it. And on top of that, they also have a comparison with other firms that you can start looking at today. This price says it all. These are so cheap. The best part is, regardless of what kind of trader you are, they have so many different options for you to choose from. So if you're looking to scale up funding fast with a reliable prop firm and you can remove that anxiety of getting payouts denied, Alpha Futures are the one you should choose. Check the link in the description where you can, and if you're looking to get funded fast, Alpha Futures are the one to choose. Check the link in the description where you can find a link to their website to buy your first evaluation. Use code Leo at checkout for 20% off. With all that being said, let's get back to the video. And the trade that you saw me take here was using Alpha Futures 100K zero plan. So far we've covered this. Price action on futures is a lot cleaner, as we discussed at the start. Futures prop firms are cheaper and easier to scale with, as I've just shown you through the pricing. And you have zero spreads, meaning when you enter, you get filled at your exact price. And if you're not sold already on the idea of switching to futures, take a look at this. So I used to be a Forex trader myself, and I took the switch to futures about 2 years ago. I've been collecting data on this model, which is called the initial balance. And this is one of the most popular traded models across futures assets because it's so consistent. I've got about 5 years of data on this. Now, I would love to see any Forex trader get this level of detail to their data, because I guarantee you they can't, because of just how manipulated the asset actually is. Now, speaking of manipulation, we're going to talk about swings. And what I mean by swings is like this. You know, you get swings higher, swings lower, swings higher, swings lower, swings higher, swings lower. That is a swing. Now, if we take a look at the difference between Forex and futures, let's take a look. Now, the swings on futures tend to be less volatile. And what I mean by this is you can expect less massive random spikes to the downside, big impulses, another random spike, another big impulse, random spike. In futures, the price action is a lot more contained, is the word that I'd use for it. And you can see here that we get shallow swings lower, big impulses, shallow swings lower, big impulses, shallow swing, big impulse, shallow swing, big impulse. And this happens consistently. Shallow pullback, big impulse higher, shallow pullback, big impulse higher. And again, you can see it here. We have big impulses, pullbacks to 50% of the range, continuations higher. Now, if we move over to Euro USD, which is the most traded Forex pair in the world, you'll see it's a little bit different. I've already loaded up the chart and I'm seeing here massive impulses higher, followed by periods of consolidation, followed by massive sell-offs. And if we move here, I mean, look at this price action. You're getting shallow pullbacks, decent impulse, mass consolidation, massive opening gap. Then you've got massive swings lower, massive impulses higher. You see the point. There's a massive difference between these assets. And if you find yourself always getting wicked out and then price going to your take profit, this is probably why, because you're trading assets that are consistently being manipulated, compared to something like futures, which is less volatile and more structured. And for that reason alone, that should be enough for you to take the switch, because I hate getting wicked out of trades. And that used to happen to me all the time trading Forex. But since I've taken the switch to futures, my trading has completely transformed. And I always find as well that futures tends to offer more opportunity during a week compared to something like Forex. So how do you feel about futures now? Do you feel a little bit more confident? Do you feel like you understand a little bit more about the asset's behavior? Hopefully you do. And if you're looking to speed up the process of calculating risk, you can just get on ChatGPT and you can get it to make you a little spreadsheet to calculate risk. So how many points is my stop loss? It's 16. So I can just change this number in here, which is 16. How much do I want to risk per trade? I want to risk 500. Press enter. I need to enter 15 micros. It's that simple. I enter 15 micros and I hit TP. So calculating risk doesn't have to be difficult. If you want to, like I can, over time and experience, I can just kind of do it in my head. But just go on ChatGPT and get you to make you a quick calculator. All you need to do is change one number and that's it. So understanding contract sizes, you don't really need to understand it anyway. You can just use this risk calculator here. Tell you how much you want to risk, put in how many points your stop loss is, and it'll give you the exact size you need to use. And if I was still trading Forex, I probably wouldn't have the results I have today, and you probably wouldn't even be seeing this video. Futures completely transformed the way I trade. Now, as I mentioned to you, if you made it to the end of this video, I've got a little bonus for you, which is my Asia sweep model. This is one of my most popular videos on my channel, and I've got some amazing feedback with this. People getting fantastic results, and also the explanation was super clear. So I'll leave that video somewhere on screen so you can watch that and take notes. And if you have any questions after watching this video, feel free to leave them down in the comments and I'll get back to them in as much detail as I possibly can. And with all that being said, thanks so much for watching, guys. Have an amazing rest of your day, and I'll see you next time. You take care.